Welcome back to Trading Bird. Every trade has a story, and whether it ends in a win or a loss, there's always something to learn from it. Today, we're looking at a short trade on SPY after an aggressive overnight gap higher. I'll walk through what I was seeing in the market, why I believe buyers were beginning to lose momentum, how I managed risk, and what I think could have been done better. Let's get into it. Coming into the session, SPY had already gapped up aggressively overnight and was trading above its average daily range. Friday's close was at approximately 742. By pre-market, the SPY was already trading at 752. That's a $10 move. That's pretty aggressive for the SPY. When the market opened, buyers continued their momentum, pushing it up for higher highs and higher lows, higher highs, higher lows, higher highs, and higher lows. By the noon hour, the SPY began to lose its momentum. And this is my first indication that the SPY is going to begin to turn. I noticed that we created a double top, so now I'm looking for sell side liquidity to be taken out. I also noticed that there was a fair value gap sitting right below sell side liquidity, which the market may respect. Now, the market did touch this level and it hung out for a little bit before it eventually broke below it and then proceeded to go back above this fair value gap. But because it broke below it and did not fully respect this fair value gap, I am thinking that this market is going to definitely return. So I began to look for opportunities to enter in for a short position. Now, this market entered back in and took out internal liquidity, but it did not provide me a fair value gap, which I like to trade. So I'm patient and I'm waiting for my opportunity to take this thing shorter. As we can see, the market does push lower. Now, I would have loved to have been a part of this move. However, the fair value gap did not get formed for me. But I noticed that the market took out sell side liquidity once again, which is further confirming that this market is going to reverse. But we did get a fair value gap right here at liquidity. So I'm looking for the market to enter into my fair value gap where I can take my trade. And that's exactly what I did. So we waited for this fair value gap to form and for the market to enter into the fair value gap. Now, I don't enter in on a 5-minute chart. I actually go down to the 1-minute chart. And the good thing is about this indicator is I'm able to lock this position for the 5-minute charts, go down into a 1-minute time frame, and be able to enter in on a precise entry. Now here, we can see that the market did touch my mid-level point where I like to enter in. Now, I didn't get in at this particular level, but I got in on this one. And if I waited to be more and waited and was more patient, I would have been able to get in on this bar here. And this would have made my profit even greater. Now, once I enter into my trade, I go back to my 5-minute time frame. Now, considering that the market was pushing up and I'm trying to take it in an opposite direction and is mostly just consolidating and trending sideways, I'd limit my risk. I like to take profit using my 4-hour charts. But because the 4-hour charts provide me with such greater distances and we have a consolidating day, I like to bring this down to the 5-minute chart and I'm looking to take profit a little quicker than I normally would. My first level of take profit was back here retesting the lows of this particular move. My next level was right here, and my third level was right here in this fair value gap, expecting a reaction at this level. Now, I didn't get to see all of my take profit levels, but I took profit here, and when the market began to reverse on the 1-minute chart, this is where I like to get out. And this is exactly where I got out on this bar. And if I didn't get out, I would have lost on so much more profit. I would have went right back into my entry zone. Now, if I had held this for the rest of the day, then I would have been able to profit a little bit more. But because this SPY is trading sideways, if you're an options trader like myself, you're going to be watching your options profit go up and down, and eventually it will go into your favor. But by this time, it may not be as great as it was back in. The biggest lesson from this trade wasn't the analysis. It was patience. The trade worked, but I know I could have achieved a better entry if I had remained focused and waited for price to reach the level I originally planned. Sometimes improving your trading isn't about finding new setups. It's about executing the plan you already had. Remember, 90% of traders focus on entries. Professional traders focus on risk. This wasn't about predicting the market perfectly. It was about identifying and balance, defining risk, and managing expectations based on the type of market environment we were trading in. I'll see you in the next breakdown.